And good morning, good evening, good afternoon, students and traders and analysts. Yeah, tomorrow never came. Tomorrow never came, right? I'm sorry everybody, yesterday I didn't have time. But I hope you enjoyed the private group coaching, right? I share with you some tiny secrets, you know, that we professional traders, the institutional traders, you know, how we are groomed. You know, it's not a secret per se, but it's still a secret because it's not taught online. You have no TikTok video, YouTube video, Instagram video to watch. So take it from me. In order for you to be consistently profitable professional trader, your strategy must be in synergy with who you are. Your strategy must be in synergy with your personality. Okay, it's not a secret, you know. You can say, oh, I can understand this, but more of this in the Forex course 202, right? The advanced institutional trader course, when you're going to learn what tools institutions are using to make money. It's called the money phase, you know, and this is one of the secrets, you know, a small one, you know, just to motivate you, just to pump you up a little bit, you know. The coach, the institutional coach, the coach that it's training, performance coach in an institution, you know, investment bank, hedge fund, broker, whatever may be the case, you know, they know, you know, me too, we know that for the guy or the girl, for John or Jane, for their performance to skyrocket, their strategy must be in synergy with their personality. Alright, this is just one of the tiny secrets. Anyway, today it's lesson, give me a second. So this was the from the channel, right? This was from yesterday. Private group Forex course 202. The only correct way to build your strategy is not a long video if you didn't, but I hope you enjoy. I hope you enjoy it. Anyway, today it's lesson 7. Okay, how to trade uptrend and downtrend with trend lines. So we're moving forward, hopefully, with the knowledge. Never forget to read disclaimer. This stream it's not trading or investment advice. We are here to learn, and remember that trading is a learnable skill. Alright, you can do this absolutely. Nobody is born a trader. And never forget, if you've been around the block 2 years, 3 years, 4 years plus, if you are not a beginner trader anymore, if your way is not working, why don't you try mine? You know, just give it a try, you know, you don't have anything to lose. Alright? Time is going to pass anyway. Alright, so let's go to the charts. And what? We talked about Canada JPY. Let's go to USD CHF, right? This is a pair we didn't talk about yet, right? So monthly and weekly and daily. All right. I sincerely hope that you are doing the homeworks, all right? Because I'm looking for traders, all right? In one of the lessons, I'm going to show you a little bit what are the institutions that I'm partnering and working with, okay? And we are looking for traders. You know, are you my next trader? You know, or partner or whatever. All right, everybody. USD CHF. I chose this part. Why? Because just quickly, we need to build up the chart so far. Okay. So number one, we talked about monthly bands, and we clarified that CHF JPY. This was lesson number 1, by the way. That USD CHF, not CHF JPY. That USD CHF, it's an exception to the rule with AUD NZD, USD CAD, and Euro GBP, meaning those currency pairs have huge monthly bands. As you can see, the upper band would be somewhere up in here, and the lower band would be down here. But for the, I'm going to delete it by the way, not to mess with our heads, or at least my head. But for the last, so USD CHF specifically monthly chart from 2011, for the last 13 years, this market, this currency pair, you know, it's gravitating inside this consolidation. All right. So talking about the market wave, you know, really we don't have much, right? So the market hit the upper band in here. So if I want to connect highs and lows, high to low, low to high, high to low, that's all that I can put on the chart as per the market wave, right? Okay, you should do too. Now let's go on the weekly chart. Same story. I'm going to right click and sync in layout, right click, sync in layout, and we're going to go now on the weekly chart. Now this time the market wave, right, changing short-term trends. Hopefully you are studying the charts, hopefully you're doing the homeworks. So just quickly, you know, I can see lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. This is the lower low, and then I can see higher highs, higher lows, and that's a high but that's not a low, so higher high, higher low. All right, now by the rules, that's the down extension of the market wave on USD CHF daily chart. Extension, retracement. All right, extension, retracement. Now see, this is the higher high, right? This is the higher high. All right, this is the higher high compared to this high, but then after this higher high, this is a lower low. So the market wave goes extension, retracement, extension. All right, one more time, repetition is how we learn. If you might be asking, what about this uptrend? And there is, not relevant for charting our down market wave. Okay, uptrend, yes it is, but not relevant because the market pushed down in here, and those are the relevant highs and lows on the market wave on USD CHF on the weekly chart. Do this with me. If you didn't do this before, do this with me. USD CHF, it's one of the easy money makers. Okay, it's a no-brainer in the sense of, oh, when it hits the lower band, just buy the, you know, just buy the band. All right, easy for you to say. We are getting there. Okay, just give it time. But now we are on a different currency pair and we are doing the same stuff. Wouldn't you agree? We are using the same concepts. I don't want you to get attached to euro dollar. I want you to learn the concepts. I'm looking for traders. Okay? This is how I've learned in an institution. So I'm trying to pass you the same knowledge and the understanding that I can use the same concepts and the same rules and the same charting concepts and the same trading rules on all time frames. And this is why we are changing. You know, one day it's euro dollar, then it's Canada JPY. Starting the first day was AUD CAD, you know, and different currency pairs. Today we are on USD CHF for you to learn and apply and see, spatially see that every single time frame has its own market wave, right? Okay, now this up in here, it's still a lower high, wouldn't you agree? You know, so being a high, you know, and I'm going to put a horizontal line for you to see, okay? Agreed? The market didn't break the relevant high on the market wave. This market wave is still down, agreed? Oh, but the monthly bands, step by step, don't mix apples with bananas. Do we agree that this market wave, technically, graphically, is still down, alright? So, if I do something like this, does the market wave on the monthly, and let's make it violet, alright? So, does the left side of the chart looks like the same as the right side of the chart? Yeah, English, alright? So it's plural. Do these two charts look like the same to you? Talking about the violet market wave? Yes, they do. Alright, about the direction, yes, they do. What about short-term trading? Do we have the same amount of extensions and retracements? No, we don't have the same amount. The weekly has more extensions and more retracements. Therefore, you would trade from the weekly perspective, you know, on the 1 hour chart, 2 hour chart, 3 hour chart, 4 hour chart, completely different compared to the monthly, agreed? One more time, why is that? How do you know? Look at the chart. You know, on the monthly you have low, high, low, high. You have one, what is called one swing. You know, from the weekly chart you have 1, 2, 3, 4. You know, you have more swings, right? So when it comes down to trading the 2 hour chart that you love, the 1 hour chart, for God's sakes, the 15-minute chart, if you want to be a day trader, then the understanding that every single time frame has its own market wave, this becomes number one, so valuable to you, you know, and so relevant to trading, and also relevant to predicting the future, you know. It's maybe too soon, but take my word for it, this market, the forex market, it's predictable to a degree. Alright? You're not going to win every single time, but you can predict 60% of the time, 17% of the time, 80% of the time. If you're a good analyst, you can predict quite, you know, like the example when the market came down here, you know, talking about predictions. When the market hit this lower band, you know, it's common sense. And not talking about the strategy, but it's common sense, you know. Me and my traders, you know, and me telling my group of traders, and me telling my students, traders, whatever might be the case, telling guys, you know, John and Jane, prepare yourself to buy. Oh yes, but I don't want to hear yes, but we're at the lower band on USD/CHF. This market 7 times out of 10 is going to go up, because this is how the forex market works. Was lesson number 1. If you didn't watch lesson number 1, okay, it's going to appear at the left side of the session, the link. Click on it. Lesson number 1. What is the forex market about? You can still catch up because we are at lesson number 7. In a few months, you know, we're going to be at lesson 100. Then it's going to be difficult. Alright? Okay, so moving forward with the knowledge, okay, we are still here, and now we are monitoring the short term. So this is the daily. Gosh, I was on the daily, I should be on the weekly. Even better, right? Oh, this is the 4 hour, alright. Even better. Okay, so even better. So we are saving time. All right, this was, yeah, it was not the it was not the weekly. It's the daily. Even better. So we are on the daily chart. All right. Now, what do you think is going to happen for, and remember today it's May 16, 2024. What do you believe is going to happen from here on? 7 times out of 10. You can call me out, I'm always open, okay? Now, if this is, so we clarified, you know, extension, retracement extension, and you have this leg, all right? And let's color code it in blue. There you go. You have this blue leg, all right? Now, so far, this blue leg, it's still a retracement leg on the down market wave, on the violet down market wave. Agreed? All right. Boss, how do you know? Because it didn't break the relevant high. Agreed? Okay. But because we are at the monthly band, there is a high chance, talking about probabilities, the market can do anything it wants, when it wants, for how long it wants, but there is a high chance, because the monthly bands are the driving force. The monthly band, this is a concept from the manual, if you don't receive the free manual, send me an email. Alright, free manual for you, it doesn't cost you a cent. The monthly bands are the driving force in the sense of are the strongest. Okay, and I'm going to show you a few examples later, but just the understanding that, alright, so then this market is going to push down. Yes, it's going to push down. Now, what changes the vision is, are you predicting the next leg to make a lower low, breaking the monthly band, or are you predicting that, alright, there is going to be a lower low, you know, I don't know until where, but then it's going to go up, USD CHF is going to go up, and it is going to break the relevant high. Alright? Those two visions for you as an analyst trying to make pips on a demo account with the purpose of, oh, I won and I understand why I won. Not making money, not yet. Beginner trader stock, not yet. Making money, not yet. You're on a demo account if you're smart, but you have a winner and you say, alright, this makes sense to me. Now I got it, this makes sense to me, why this market went up and not down. Oh, this market reversed in the middle somewhere because of the monthly band, on being specific on USD CHF. Okay? Compared to somebody else who is going to say blindly, it's all about education, we are not arrogant, but no, this market is going to fall and it's going to make a new lower low. It can, but not 7 times out of 10. 7 times out of 10, this market, even though it's going to in a retracement, which is super normal, you know, because of the monthly band, somewhere in between is going to stop retracing and is going to start moving back up. You can call me out in about 3 months, 6 months, or a year. You can call me out online on YouTube and say, oh, Mike, you are telling bullshit. So I'm here, you know. Let's see if Mike knows what he's talking about. Alright? But this is the logic, okay? The strongest force are the monthly bands, okay? So I am predicting this market to retrace, and I'm predicting this blue retracement leg this blue, yola yola, the alarms. I'm predicting as an analyst that this blue retracement leg on the violet down market structure wave, this blue retracement leg on the violet down market wave is the first extension leg of a projected up market wave, up market structure trends. Boss, can you repeat please? Yes, sir. I'm predicting, because of the monthly bands, that this blue retracement leg, it's still a retracement because it didn't break the relevant high. But I'm predicting, I'm projecting, I'm trying to be a good analyst, you know. And I got the bonus too, like you, we got the bonus as analysts, you know. Before we become traders, if the trader makes $1 million, you know, he or she is going to give me a present of 100,000. You know? So I'm predicting that this retracement is still a retracement because it didn't break the relevant high. I'm predicting this retracement to become the first extension leg because of the monthly band. All right, so maybe I'm right, maybe I'm wrong, you know, who knows, but I'm projecting that this market somewhere in between is going to stop falling and start going up, and I'm predicting that it is going to break this relevant high. Okay, it's a projection. So we are working on number 3. You are going to graduate from this course and you're going to be welcome to join the Advanced Institutional Traders course, the money phase, you know. Number 3, when you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. I can be a loser, sure, you know. I can lose on my prediction, sure, but not 7 times out of 10. Alright? This is what I want you to burn in your mind. Learning the right things in the right way. This is going to increase your probability to the level of you are going to start to win 7 times out of 10. Alright? Now, of course, the lower the time frame, I don't want to talk complicated, but the lower the time frames, then this probabilities changes, you know, it's patterns become random on the 50-minute charts. It's quite difficult, challenging if you want, okay? But just for today, I wanted to understand, so key parts of this lesson today. The monthly band is the driving force. It's strongest than any market wave, short-term trend, Ichimoku, Elliott wave, golden unicorn and dolphins, strategies, the monthly band. The knowledge that, there are key levels, relevant highs and lows that the market, if it breaks, then it's going to reverse the pattern. Alright? This is number 2, so this is the relevant high. And if you're on TradingView, what can you do? You can zoom in and, you know, you can put an alarm, add alert, you know, and you go market wave or market structure trends, market wave changed to long / buy. Alright, there you go, there is an alarm. So boss, you are predicting this. Yes, I am. Remember, this is not a strategy. Don't mix apples with bananas. This is beginner analyst stuff. Alright, you're on a demo account. You're trying to make pips and money on a demo account with the sole purpose. This is for 1 year. Alright, with the sole purpose of you understanding. Oh, I won 5 trades. I got 5 winners. Good. Explain to me how. What was the logic behind the setups, where you entered, how you entered? Why did you this is a great example. USD CHF, if the market retraces to maybe this level, we're going to learn about support, resistance, pivot point, but maybe this is past resistance. This would be a great example that, you know, the market come down to here somewhere and stops moving down, stops and starts going up, making higher highs, higher lows. This would be a great example, me asking you, you know, John or Jane, why did you buy a down market wave? John, you won. Jane, you won too. Guys, why did you buy a down market wave? You know, seeing a chart in the way like it is right now, why did you buy? I can see it. Why? It's a tricky question. I'm testing your knowledge. But this would be a great example like, oh, why did you buy a down market wave? So this is knowledge, and this is the skill when we say, you know, oh, trading, it's a learnable skill. So you're going to come and say, boss, we bought the me, John and Jane, we bought USD CHF because the market was at past support, which we didn't learn yet, it's coming, but, and then I'm going to test you, you know, I'm going to fight with you, like, but it's still a down market wave. But you're going to say, yes, but the monthly bands are the driving force. So we were projecting the market to do this and go back up and break the relevant low because of the monthly band. And then I would applaud, say, oh, now we are learning. Now you know, now you got it, you know. All right. So this is for the first chapter of this lesson today. And again, I'm sorry yesterday I didn't have time, and I still, you know, I hope you enjoyed the private group. We are on the daily chart, and we are going to monitor low to high, high to low, 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 low to high, high to low. Okay? Now I'm going to delete this one, I'm going to delete this one. And I'm going to go on the 4-hour chart. Alright, and I'm going to ask you, you are the analyst, I'm the trader, and I'm going to ask you, alright, tell me, should we buy, should we sell? It doesn't really matter if you tell me, if it's a day trader, so what we're going to do today. If it's a swing trader, what we're going to do this week, this month, whatever. So you as an analyst, you must be clear on what is short term, what is long term, all right? What is medium term, all right? This is how it goes. You need to learn this stuff, everybody, okay? So you can zoom out. You can zoom out and look at the chart, you know, and you can zoom in. And when you zoom in, you know, if you're a beginner, you know, or even not, if you zoom in, then your brain is going to say, all right, it's going down, making lower lows, lower highs, but it's moving up, you know, we didn't learn candles yet, but the last 3 candles were bullish, and it looks like it's going up, so, you know, and we are going down as per the short-term trend on the 4-hour chart, and we're at past resistance, so it's I should tell my trader to short the market on USD CHF 4-hour chart, but the market is still going up, so boss, I really don't know what to do. right? This is confusing now. And it's okay. This is really how it is in the beginning. It's confusing. Okay? So let's make order out of confusion. Alright? Moving forward. Trading, charting. So let's upgrade your knowledge. Trading / charting concept. The higher time frame patterns, patterns are dictating price action and direction of the smaller time frames. Alright? Burn, ingrain, print this trading charting concept in your subconscious mind. Burn it. I don't know how. Punch yourself. I don't know how. Hit the wall with the head. I don't know how. Burn this concept. Write it down 500 times. Print it out. Put it everywhere. The higher time frame controls price action and movement of the smaller time frame. Okay? This is the most important concept in forex trading. Okay? People are always asking, oh, what about crypto? I don't know. What about the stock market? I don't know. What I'm teaching you, this works for the forex market, and I'm telling you the forex market, it's easy. If you, fair enough, if you ask me, you know. If you have somebody else, no, forex is difficult, but if you're going to listen to me, and hopefully everything that it's been said until today makes sense, you know, if you are going to listen to me and apply and trade, I guarantee you, you have the recording online, you can call me out, I guarantee you, with time, you are going to start losing less and you are going to start making step by step. Consistency comes, of course, in the Forex course 202, you know, but just the understanding of how this market works, you're going to start lose less on the demo account if you're smart. So what I want you to learn today, if you're coachable, listen to, you know, oh, there you go. Listen to the father. See, we have this for the uncoachable students in the advanced course. Listen to me, you know, the higher time frames do matter. Oh, but I'm a day trader. The higher time, listen to me, you know, I'm just joking, of course, but the higher time frames, they do matter. What is happening on the daily chart has relevance to the 1 hour chart, 4 hour chart, 2 hour chart, and yes, 15 and 30 minute chart too. Alright? I promise you, I guarantee you, if you're going to use this concept and chart and demo trade with this in mind, I promise you, I guarantee you, you're going to lose less. Okay? And remember, stop loss goes on the pattern trade. If you just can implement those two, you know, you are going to see that you're going to start lose less. Boss, teach me how to make money. This is another story then. It's Forex course 2 strategies and the business. But with those two, if you can learn to use the appropriate stop loss in the right place, in the appropriate place, stop loss goes on the pattern traded, stop loss goes on the pattern traded. And with this one, you know, that the higher time frame controls price action and movement of the smaller time frame, I guarantee you, you are going to start lose less. Make sense? Your vision about the market, what you think it's an uptrend, oh my gosh, it's really a retracement. You know why? Because the daily is the driving force on the 1 hour chart, 2 hour chart, 4 hour chart, and this concept applies to all time frames. Okay, when the monthly candle, it's, you know, it's oscillating but it's moving up nonetheless, what do you think it's happening simultaneously on the weekly, on the daily, simultaneously on the weekly, on the daily, on the 4 hour, 2 hour, 1 hour and other charts? What do you think? Boss, I don't know. What do you think? Exactly. When the monthly, which is the highest time frame we are charting on, when the monthly it's moving up, it's gravitating, it's oscillating up, it's taking all the chart and it's bringing all the chart together up. The higher time frame controls the price action and movement of the smaller time frames. All right? Now, I promised you we are going to learn trend lines, all right? So, moving forward, rule, charting rule. Sorry, everybody. Charting rule. TL stands for trend line. A trend, okay. Trend line is a tool that confirms a trend. All right, charting rule. A trend line is a tool that confirms a trend. Period. End of story. All right. Now, so if I can go here, we are still on USD CHF daily chart. I can go here and take this low and extend the trend line and do it, you know, something like this, you know. Would this be the correct trend line? And I'm telling you, don't get angry with me, because I'm trying to trick you. Somebody says, yes, this is the correct trend line. No, it's not. This trend line should be like this. All right? Why? Because, and again, trend lines, we are going to work on this today. This is our last lesson of the week. See you back on Monday. On Monday, we are going to continue to work on trend lines too. But just for today, you know, why this is the correct way and why this one would be wrong. So why the black one is the correct one and the red one is the wrong one? Because the black one is confirming that we have a downtrend. Don't we have a downtrend on the daily? Markets making lower lows, lower highs. So if I do this, then I'm not, it's going to take some time. As always, I beg you, download the video from YouTube, rewatch it a few times, study the chart highs and lows. Okay, you have one more tool today, starting from today. All right, recap. You've learned monthly bands. You've learned how to determine lows and highs. You've learned how to confirm 100% uptrend or downtrend. And you've learned about the market structure trends, also called the market wave. Now you have another one, the fifth tool, trend lines. Dedicate yourself. You know, if you're a complete beginner, if you want the Lambo, not in 1 week. Lambo doesn't come in 1 week. Not in 1 month. The Lambo doesn't come in 1 month. If you want a Lambo from about 3 to 5 years, now it's the time for you to pick up the sleeves. You know, I'm not bragging. I'm telling you how it is. Now it's the time for you to get dedicated, organized, studying charts. You know, it's hard work. We know, you know, dedicate. All right? Back to the lesson. So a trend line is a tool that confirms the trend. This trend line, it's like this. This is the correct trend line. This is the trend line that confirms the uptrend. And the uptrend, if we zoom in, the uptrend was until up in here. Agreed? If you don't agree, send me an email or say hello on Skype because you need help. Alright? And I'm not arrogant. You might have learned in the wrong way. Okay? Now, what I'm going to do, I'm going to right click, sync globally, and the shorten trend, right click, sync in layout, shouldn't sync globally, sync in layout, and I'm going to go on the 4-hour chart. Right? So the vision now with another tool, and I can delete this one too, the vision is, oh, the market broke the uptrend line on the 4-hour chart, didn't it? The market broke, so I'm trying to make sense out of this market. What is happening? What happened? Fact, the market broke the uptrend line. Fact, the 4-hour chart, USD CHF, it's in a downtrend. Fact, market's moving up, talking about candles, but for me to tell to my trader, listen up, it's always the same, but so one more time, listen up. For me to tell to my trader, all right, let's buy the market must break this relevant high of the downtrend. Agreed? Boss, how do you know and why? Because this is the level that is going to break the pattern. Very good, we are learning. Plus, starting from today, if I click in here and I extend the trend line, downtrend line, you know, and I connect it with this high, I can also see that, and make it black, you know, it's uptrend, downtrend. So if a trend line is a tool that confirms a trend, yeah, let's change colors. Then I can clearly see as a good analyst that as far as the market stays below the orange downtrend line, this market is still down. Wouldn't you agree? But it's moving up. Doesn't matter. Doesn't matter. See how this goes? See how this goes? The improvement of the understanding of the skill. See how this goes? Before, you've been chasing the money, you've been buying and selling candle going up, candle going down. Now today, fortunately, you are understanding, oh, one candle really that doesn't mean much because I'm trading patterns and it's a probability game. And this market makes total sense. And I can win. So my job, my goal as an analyst, this is what your goal should be. You know, I'm training myself to be 70, 60, right? You know, if you are humble, if you are a little bit more energetic or you have higher standard, you know, my goal is to be 70% winner as an analyst, so or assertive, you know, that to correctly predict the market 6 times out of 10, 7 times out of 10. I don't want to get too complicated today, but if I buy the market right now, all right, on the 4-hour chart, are the probabilities based on what we see, me and you, are the probabilities with us or are the probabilities stacked against us? And again, somebody's going to say probabilities are with us, somebody's going to say probabilities are against us, and the correct answer is the probabilities on the 4-hour chart are stacked against us. Okay, now this is what you're trying to learn. If you buy the market right now, are you going with the trend line or are you going against the trend line? And the obvious answer, we can say, alright, I'm going against the downtrend line. Boss, why is this relevant? Because a trend line is a tool that confirms a trend. If I buy the market, am I going with the red downtrend or am I going against the red downtrend? And the obvious answer, as you can see, is, oh, I'm going against the red downtrend. Okay? Now, some of you, it's all good, pat yourself on the back, this is what you must unlearn. Some of you might be thinking, oh, but this market could go up. Yes, it could, but a retail trader or a beginner trader thinking like this could, compared to a professional trader or an institutional trader, those guys, we are not trading based on could and should. Make sense? This is part of the skill. Because if you say, oh, but this market could go up, so you are not thinking from, you are not trading from what you see, you are trading from what you think is going to happen. Does this make, I'm not going to ask you, do you agree with me? Does this make sense to you? Oh, but this market could go up, could go anywhere, up, down, sideways. But you, the retail trader, compared to a professional thinking with could, trading with could, should have, could, whatever, you are speculating. Fair enough. Talking about you being fair as a coach, fair enough. You are freaking speculating. Okay? It's a bad habit. You need to unlearn this. The retail traders who are not making it, the semi-professionals who are not making it, still retail, you know, the guys and girls who are 5 years in the market, 7 years in the market, 8 years plus in the market, a long time. It's not uncommon and you are not consistently profitable. Pay attention because you might be in a habit of speculating it. Speculation. Boss, what is speculation? One more time. I'm trading from what I think is going to happen. Fair enough. So, and you might be arguing right now in your mind with me and you're going to say, oh, but John bought the market. Not John, Alex or Gianpaolo bought the market and the market is this. They got lucky. This is luck. Okay? And if you dare say, I'm an old guy, I'm new on YouTube, but I'm not new in the industry, I'm an old guy, if you dare, you can challenge me out anyway, but if you dare telling, no, this was not luck, I'm going to ask you, alright, how did you know Gianpaolo or Jean-Claude or Alex or Jane, how did you know that the market is going to go up? Because this is what we see. What is telling you, don't philosophize with me, what is telling you on the chart, based on what you see right now, what is telling you that this market is going to go up? Is there anything I can chart against you, I can chart past resistance here. Alright? So we are going to learn about bull points, bear points. Anyways, what is telling you right now that you are buying the market? What is telling you that this market is going to go up? Exactly. Nothing, boss, is the answer. Nothing is telling me that this market goes up. So see everybody, if you are willing to listen to me, you cannot trade like this. And stop following Jones and Janes that are following and speculating. Make sense? The problem with speculation is that it has no structure. Jean-Paul or Jean-Claude or Alex or Stella, they might buy the market and the market could go up and breaks everything. Alright? This could happen. But you ask the same Jean-Claude or Stella, alright, repeat this trade for me. I mean, do it again. Make money again. Never going to happen. Because speculation, you know, what is speculation? I'm taking chances in the market, you know, I'm just buying and selling something with no clue. Make sense? I'm taking chances. So what I'm doing on the demo account, if you are smart, has no structure. What does this mean? Your brain, you cannot repeat it with logic. And you cannot learn because you cannot repeat it with logic. You cannot learn, okay, so why am I winning and especially why am I losing? Alright? So the third big one today, the third concept, it's a trading concept. Alright? And if you find value, give it a thumb up. You're helping me and the channel. Alright? So the third concept is, it's a trading concept. Trade from what you see and not from what you think it might / could happen. Me too, 20 years ago. 99% of retail traders, not institutional traders were grown differently, but 99%, I have the statistic as a coach because I'm coaching retail traders, trying to bridge the gap, trying to make them learn how a retail trader way of thinking is not right or wrong or being better or worse. Oh, I'm the better man. He's not like this, but I'm trying to bridge the gap. Like, do you understand, you as a retail trader, do you understand how an institutional trader looks at the market and the habits he has are completely different compared to you? I'm trying to help you to bridge this gap. Make sense? And it starts with this concept, trade from what you see. What does this mean? You can show it on the chart and argument, and not from what you think it might or could happen. 99% of retail traders are not making it because I'm not judging you. I'm trying to explain to you. I'm not judging you. I'm not arrogant. Please understand this. I'm trying to make sense out of your past. You've been trying to do this for 1 year, 2 years, 3 years, and you're not making it. This may be the one. 99% of retail traders trade from what they think it could happen. John, why did you close the trade? Oh, because there is resistance. So what? See the logic? John was in profit, clicked the mouse, closed the trade because there is resistance on the chart. John, but the market is moving up. John, the market is still in an uptrend. John, the market is above the trend line. Why did you close the trade? Because it's resistance. So what? John is trading based on what he is thinking it might or it could happen. Can you relate to this? All right. Okay, a little bit more complex lesson today. We came a long way, so what are we going to say on the 4-hour chart? Just in conclusion, until the market breaks this high, we are staying short. How to enter, it's a question of strategy. We are going to wait for the market. If this is the 4-hour chart, we are going to wait on the 15-minute chart. Just an example, we are going to wait, or maybe 30-minute chart, right? Even better. We are going to wait on the 30-minute chart for the market to break this trend line. Okay, so right click on trading view, you can add alert on the trend line, short the 4-hour example. This is not trading advice, we're here to learn. Short the 4-hour STT short-term trend, create. All right, now we're going back to the 4-hour chart. So I'm telling my traders, just an example, and me as an analyst trading the demo account, I'm going to short the market, when the market breaks this downtrend line. All right. So on the 4-hour chart, not the daily, don't mix apples with bananas. Trading based on what we see, the prediction is short. Okay, we're going to wait for the market to break this trend line before we go short. If this happens, stop loss goes above the pattern traded. This is the correct stop loss. All right. And if this doesn't happen, we are playing chess with the market. If the market does this, I'm going to do that. If the market does that, I'm going to do this. All right. And if this doesn't happen, we are staying out until the market breaks the relevant high on the short-term downtrend. If the market breaks this relevant high on the 4-hour chart, we have an alarm on the daily. I can put on trading view an alarm also on the 4-hour chart. Go long on the 4-hour chart. All right, or market change direction, even better. Market go long, it's already a strategy, but market changed the STT, figure out to buy, something like this, whatever might be the case. Create. Okay. Before we finish, if this is the downtrend on the 4-hour chart, if the market goes up and breaks the high, what is going to happen next? Let's see if you've learned something. If you are saying, what is going to happen next? I don't know. Or buy, wrong. When the market, so short-term trends and market wave, they work in the same. Downtrend works with extension, retracement, you forgot it, huh? When the market goes up and breaks the high, and this becomes the new extension leg, this becomes the new up extension leg, you don't buy there, you wait for a retracement. Exactly, retracement, and you buy later. So you have one more. Maybe you are buying breakouts, right? Market broke a higher high or a relevant high, you bought it up in here and the market went against you, and with a short stop stopped you out. I mean, I'm writing a book about trading anyway, you know. Okay, enough for today, right? Enough. You said, okay, enough. Thank you very much, everybody. See you back on Monday. Below, it's the link to subscribe to the channel. The link is going to appear, and on this side is going to appear lesson number 1 for you to learn, all right, how this market works. Okay, subscribe to the channel for not to miss any other lessons, and rewatch lesson number 1 if you are new. Okay, have a great weekend, everybody. Send me questions on the email if you have it, and see you back on Monday. This is Mike. See you. Thank you very much. Bye bye.